Well, 2025, what are you going to do that's different this year? Are you going to make 2025 your best year ever? Well, if you stay tuned to the next 30 minutes, I'm going to do my best to help you on that and get your year started in the best possible manner. My name is Ritchie Clapson, and welcome to the Open Door Show. Well, welcome to the Open Door Show. Welcome to 2025. My word, we're here already. Who could have believed it? Well, 2025 in property. How are you going to make this your best year ever? Well, on the Open Door Show today, I'm going to try and do my best to help you out with that. What exactly is the Open Door Show if you are new to us? Well, we always take a deep dive into the world of small-scale property development. We talk to various people. We find out what's going on in the news. And we try and steer you as best as we can to start your journey or continue your journey or to make you more successful in small-scale property development. So let's talk about 2025. What's it going to be? What's going on? Where is the biggest opportunity out there in property development? Well, let's start with property. Because a lot of people listen to this channel and you're interested, not just in property development. You probably come here maybe with a buy-to-let portfolio. Maybe you're an investor. Well, I think the important thing that we need to think about is the way the market has shifted, the way the world has shifted, the way the UK has shifted in the way we deal with property and the way we can make money. And I think 2025 is going to be different for many, many people. And what you want to make sure is that you do not miss out on where the biggest opportunities are. Now, what has been going on? What's been going on over 2024, 23, perhaps before that? Well, there's been a big shift. And let's say we're talking about property, we're talking about property investment, we're talking about property development. And there's always this issue or problem that people sort of say, well, am I going to be an investor or a developer? Or you can do both. In fact, you should be doing both. Both is exactly what you should be doing. And of course, investment looks easier, looks relatively straightforward to get involved in investment. So it's a route a lot of people take. And I get some people might need to take that route because they feel that's the easiest and simplest way to actually get some income, maybe from some buy-to-lets and HMOs, maybe serviced apartments, and get out of the day job. But there is another way, and maybe it's start in property development. And there's a lot of people now taking that reverse approach. One, because I think their eyes have been open to the art of the possible, what you can do with property development and how you can get started in property development. And secondly, people are looking at the investment models and looking at the problems and restrictions that they have. Now, I say problems, restrictions, I'm talking about taxation, I'm talking about legislation that has been coming in. And that has been getting worse. And, 2022, a lot of landlords become developers. In 23, we saw a lot more landlords become developers. In 2024, we saw a lot more landlords become developers. 25, I think that is going to progress in the same manner. And in fact, I was at an event before Christmas, and a chief executive of a very large funding organization stood up and said 2025 is going to be the year of the property developer. And he was talking to a room full of investors, primarily investors. And he said, if you are not in property development in 2025, you're missing a trick. Now, what's been going on? Where has this shift happened? So you might be a landlord out there thinking, well, I hear this, I hear what. But look, you felt this, haven't you? And even if you're not a landlord, you know this stuff is going on. You've been out there and you've been in a position where interest rates have gone up. We've all seen that, haven't we? And when those interest rates have crept up, it's been in a position where certainly on the buy-to-lets, it's often just wiped out the profitability. That profitability is gone. And it ends up in some situations at the end of the year when you pay your tax bill, you end up paying more than what you got in. So actually you've got a tenant in there, they're paying a rent, And ultimately, I've heard this so many times where landlords have got properties, then they got their tax bills, and then they've gone, oh, blimey, I'm actually paying the tenant to stay in my property. So that's not good. Now you can put up rents, you can try and organize these things, but the model has become more difficult. Now, interest rates have leveled off a bit, they're a bit more sensible, but you've got to look back, and you've got to look back historically where interest rates have been. I mean, I know when my wife and I first got married, I mean, a few years ago, 35 years ago now this year, well, interest rates went up to 16%. We were in negative equity in our first little starter home. I mean, I remember that 16%. And so, when interest rates are down at 2%, or it's not going to last, particularly if you've been around a while. And of course, interest rates 6, 7, 8%. Well, that's not too bad. But a lot of the time, that wipes out the profitability of your buy-to-lets. And it doesn't mean to say that they're not a good strategy. It doesn't mean to say that it's not a good investment model, because in time, those values of those properties will go up. So the equity increases. And in time, you would have paid off the mortgages. So there is going to be a point, and it could be 20, 25, 30 years away from now, that you end up in a position where you've got these properties with no mortgages and you've got some good income. And what a lot of landlords have traditionally done through this traditional, what I might call vanilla buy-to-let route, is built up their portfolios alongside another business or another career, another job. They haven't relied on it for passive income. They've run those portfolios, and when they retire, they're in a position where those portfolios start paying, and often they sell off one or two properties unless they're going to pass it on through an inheritance route. And they sell them off and they end up with some lumps of cash. Lumps of cash, always useful. And of course, their income, because there's no mortgage, is a lot easier. Well, legislation has changed some of that, and to do with taxation and so on. So that model, even if we just looked at it as a long-term strategy, is nowhere near as efficient as it used to be. Now, you've got to run it professionally. You can't run it in your own name. You've got to run it in a company. There's lots of other things you've got to do to make it efficient. But even now, that model is often a struggle. It's a long-term investment. It's a long-term game. So if you are looking to get some buy-to-lets to get out of the day job, I think you're going to struggle. Now, that's going to get more difficult, isn't it? Because we've got the renters' rights bill that's come in. That was coming in, and that will make it more difficult to get rid of your tenants should there be a problem. It makes it more difficult, even if your tenant is not paying the bills, not paying their rent. How can you get rid of them? And so there's some real challenges that the legislation, I believe unfairly, is going on the side of the tenant and not the side of the landlord. And so it makes it a business, in my view, which is it's hard work. It's quite hard work. Okay, if you've got some cash, put it in there long term, but don't expect to live off of it. That's the big thing. Now, that's the reason, I guess, that a lot of landlords are going, well, what can I do? What can I do that's different? A lot of people have progressed into the houses of multiple occupation, HMOs, and it makes sense. There's more money out of it, but there's a lot more noise. I hate noise. I absolutely hate noise, because for me, more importantly than money is time, isn't it? Would that be for you? Time is far more important than money. And so a business that is a house with 6, 7, 8, 9, 10 people in it who've got to get on, and when they don't get on, I've got to manage them. It's not my ideal business. It's bad enough over the years running many, many companies and having to work with all of the staff and make sure the staff are okay. You end up becoming a social worker or a counsellor. Is that the same for HMOs? Even if you get someone to manage it for you, inevitably you get dragged into these things. You get dragged in. I remember running a 3-day training session, online training session, here in my studio, and one of my students who was on there, he typed in a chat box, got to go. My tenants have just burnt down my HMO. Literally burnt his HMO down. And it's okay, you might have a manager, but you've got to deal with all that. And that's because the tenants in there are all arguing. So they set fire to the damn thing. Now, I get you, that's a big extreme. And there are a lot of people that are very successful with HMOs. And of course, you can make a lot more money, and you can probably make some money that makes sure your head's above water in terms of paying the mortgage. But you are going to get voids, you are going to get damages, you are going to get turnover, and you're going to get noise. You're going to get noise. And I think you're going to get more legislation and saturation. So in lots of areas, the desirability of HMOs is limited. And in certain areas, there's too many. And of course, someone's only got to open a brand new HMO near you, and people migrate across. So then you're going to have to refurbish and replenish and update and bring up. You're going to spend money. So it's a constant business. Not saying it's bad, but that's what it has. And then if we compare the next step up, service departments, and maybe that's your 2025 plan. But proceed with caution would be my view. Reach out and get guidance from someone that understands it. Property CEO, that's not our bag. HMO, service departments, buy-to-let, that's not our bag. We talk about development. So reach out to someone, because I think almost certainly that business is going to have more legislation coming down the tracks. It really is. It's been allowed to run free for quite a while. But I think the scale of that business, it's going to have legislation. It needs to have. Now, that's a good thing, you could argue, because the professional people are the ones that survive, and the people that just give it a go won't. But that legislation is going to be for everyone. So it is going to affect your business. And taxation, well, I mean, I'm not a betting man, but if I was, Labour are going to have a go at you. Labour are going to look at the profits you make out of that, and you're going to get more tax. Almost certainly. I mean, I don't know, but that would be my guess, because they've got to raise tax. They've got to get money from somewhere. And you're an easy target. You're an easy target. And who's going to put pressure on the government? Are hoteliers. I believe they are. I'm almost certain that if you actually looked at who invests, who lends to the Labour Party, and indeed Conservatives, and indeed whoever, there will be a number of hotel operators in there. Of course there will be. And they're going to be moving in those circles. They're going to be out there influencing the government. And of course, what those hoteliers don't want, I'm talking about the travel lodges, the Premier Inns, the Holiday Inn Expresses, the Hiltons, all those hotel operators, all of those ones you could think of, and all their sub-brands. They have got big business. They've got big turnover, big numbers, big voices. Do you think they're going to put pressure on the government to put legislation on Airbnb, which are undercutting their businesses? I know often it's a different business model, but it's the same clientele. It's the same clientele. Of course they're going to. That's my strong belief. And so that business as well is under pressure. It's going to be under more pressure, I believe, in 2025 and beyond. It's not saying it's not a good business. You just got to decide whether that's what you want to be. And the noise, if HMOs are in one ear, service departments are in both ears, because the turnover of new customers daily, weekly, is going to generate noise. The voids that you're going to get, you're going to get your occupancy right up. It's good money, good numbers when you can get it right, but you're so dependent on your servicing staff, your cleaners, your booking systems. You're vetting people. You're not getting stag do's in there that's going to trash the place, or all sorts of things. And so it comes with noise. No different to a hotel business. But do you want that noise? I don't know. And so those businesses, service department HMOs, can generate you cash, but are likely to be fitted by more legislation. So what are a lot of landlords doing? Some are moving into the HMO service department space. The majority that we see, and the noise and sound that we hear, is that people are moving into the development space, because it's a natural progression. If you are a landlord, it's just going from being a landlord to developing property and being a developer. It's all in property. And even if you're not into property and you're brand new and you're thinking about it, if you're deciding, you're thinking, well, do I go in to become a buy-to-let landlord or an HMO service department or a developer? They're all open to you. Get yourself educated in whatever route you do, but there's no restrictions. You can't not become a developer until you become a landlord. No, of course you can't. If you want to be a developer first, be a developer. If you want to build your portfolio faster, be a developer. Because most landlords run out of cash trying to build their buy-to-lets, HMO service departments. You need a lot of cash, a lot of cash. You need far less to be a developer. And the development model yields lumps of cash. And that cash is taxed as a business, is incorporation tax. So you run it as a business. And so you're in the same bracket as all other businesses. And so the government are unlikely, one would suggest, tax you any stronger, because otherwise they're taxing all SME, all small, medium enterprise businesses. And of course, there'll be an outrage because that's not going to grow the economy. It's intrinsically linked. And so your taxation is on a level playing field. And there are lots of ways that you can move money around in a group holding structure. If you're selling out, taking lumps of cash, reinvest it. If you don't need to take it out, it can be a very, very tax efficient model. And legislation, well, it's the reverse. There's less legislation. You know, the government are stripping away, previous government did, the current government are stripping away legislation and trying to push your ability with less rules, less requirements to be a developer and deliver homes. Because the current government need homes delivered. For them to stay back in their jobs at the end of their term, okay, they've got to deliver housing. They've got to deliver far more housing than the Conservatives. They're supposed to deliver 1.5 million. They won't do that. They won't do that. Okay. If I was a betting man, I'll bet my house on that one. They won't do that. Will they deliver more than the Conservatives? I think they've got a fighting chance because they've really got to go out to prove it. I mean, they haven't been in office for a long time, so they've got to prove it. If they don't, they might not be back in. So they're going to give it a damn good go. That's one thing's for certain. And so they're stripping away legislation. And in fact, they're doing what they can to support you with what we call permitted development rights. If you're not familiar with that, look back at previous Open Door shows. You'll better see and understand a bit more about that. So it gives us this right to go out and develop. It gives us a short circuit route. It means we don't have to go in for full planning. It makes our life easier. And the thing about development, it yields lumps of cash. Now, what do you think? Lumps of cash. Do you like lumps of cash? I'm not talking about 50 quid in the pocket. I'm talking about 100,000, 200,000, 500,000, £1 million. That's the sort of profits that our students here at propertyCEO are generating out of their projects. Yeah? Some projects are generating up to £1 million profit. Most, I would say, around the 200,000-300,000. Well, that would be enough, wouldn't it? If you could have a lump of cash, £200,000 to £300,000, what do you want? Do you prefer to take that or a bit of income from a buy-to-let? And the noise is far less because in the name of our company, you operate as a CEO because the best businesses are the highly leveraged businesses. And you don't need largely to do anything. I mean, I'm simplifying it, but it is a simple business model. Is it easy? No, it's not easy, but it's simple. It's not without some hard work. But you are going to be the CEO. It's about who, not how. Okay, there's a great book. In fact, I'll put a link in the chat box. I'll try and bring it up on the screen for you. Who, not how. Read that. Make that your first book you're going to read in 2025. And it's about not how do I do something, it's who do I get to do it for me. That's the world of a property developer. That's the world of a CEO. That's the world of a CEO property developer. So you can get going on this relatively quickly because all you've got to do is assemble a team, a planning consultant specialist that understands the permitted development rights, an architect that can look at the layouts and draw the thing up, a structural engineer that can put the design together, a cost consultant that can run the cost for you, a project manager to run the project for you, and a contractor and his team to deliver it. What are you got to do? You've got to have a few meetings every month, but that's it. You're not on site every day. This is a common misconception. Oh, I don't really have the time. I'm going to have to go down onto site every day. I don't really know what I'm doing. You don't go to site. In fact, you shouldn't go to site. You're the CEO. The CEO doesn't go down on the shop floor every single day. This is what your team are for. This is the team that you build. Read that book, Who, Not How. That should be your first read of 2025, because that will start setting the scene for how you can run a highly leveraged business model. And it highly leveraged with great returns. £200,000 out of being the CEO. And that's just one project. Could you run 2? Could you run 3? Yes, of course you could. Let's manage your expectations, though. Here we are, 2025, just started, January. Will you be able to sell your first project and have £200,000 in your bank by the end of the year? Would you like that by the end of 2025? Not going to happen. It's not going to happen, okay? I tell you, it's more likely to be end of 2026. So if you can wait to the end of next year for your £200,000, your first £200,000, I mean, would that be okay? Would you be prepared to do that? If I could help and show you and guide and steer you and support and push you, because you always need a little push, don't you, to earn £200,000, maybe 3, maybe 4, maybe 500,000 by the end of 2026. Let's say you're going to go in to December, Christmas 2026 with £300,000 in your bank, but you've got to start today. Would you do it? Would you start that journey? Because if you don't start today, it won't be 2026. If you don't start till May, then it'll be 2027. I want to manage your expectations. I want to tell you this is a 2-year journey. Could you do it a bit quicker? Maybe 18 months. But let's assume it's a 2-year journey. And most people I speak to, they say, yeah, I would. I can keep going in what I'm doing. I don't want to rush to leave my job. I'm absolutely fine. I don't suddenly have to get out of my portfolio. But yeah, if I start this journey today and in 2 years, I could have 2, 3, whatever, £100,000 in the bank, I'm prepared to wait. Would you? Are you prepared to wait? Because that's what a lot of landlords are doing. And I think there's going to be a bigger influx in 2025. I think the days of being the buy-to-let landlord and living off of that are gone. Long-term investment grade. HMOs and service apartments, I think, are not for everyone. Some people do it remarkably well. Me, I can't think of anything worse. Seriously, I can't think of anything worse. Managing tenants in a buy-to-let is bad enough. Managing 10 tenants, you probably all don't get on in an HMO, pinching each other's stuff out the fridge and not washing up, is worse. Managing guests in a service apartment, even worse. Is it for you? If it's not for you, what else is there in property that you can do? Well, property development, because you can do it. And let's say £50,000 investment. Have you got £50,000 investment? Yeah, maybe. What could you do? So maybe you're sat here in January 2025 and you've had a little chat over Christmas and you think, you know, I've got £50,000. We can release some money out of our pension, out of the property. We're going to refinance. We've got some savings. I've got £50,000. What could I do with that? I've got 2 alternatives for you. Okay. £50,000. And I'm going to take you on a journey of, let's go 5 years. Okay. 5 years, £50,000. And I'm being conservative. 5 years. If you've got £50,000, I'm going to give you 2 choices. Let me have a think what they're going to be. Choice 1, you become a buy-to-let landlord. And in 5 years' time, let's assume with your 50,000, you can build yourself 3 buy-to-lets. And your income is going to be £900 a month. Let's round up to 1,000. Or, so there you go. 5 years' time, you can have 3 buy-to-lets, £1,000 a month. Okay. You could have, let's say, 2 HMOs at £2,000 a month income. Maybe 2 serviced apartments at £3,000 a month income with the noise legislation. Or, let's have a think, work it out in my head, £800,000 cash. What's your choice? £1,000 a month, £900 a month, £1,000 a month coming in from buy-to-lets, £2,000 out of HMOs, £3,000 out of serviced apartments, or £800,000 cash in the bank. Which one do you want? Vote now. I mean, I should have done a little survey on this. Wouldn't it be cool? Put your comments in the chat box. Let us know what you prefer. I mean, what's most people going to say? I'll have the £800,000. And how does that work? How does this work? Let's just look at it simply. And I'm just working this roughly out in my head. If I had £50,000 I could buy a £200,000 buy-to-let, couldn't I? Okay. I put the £50,000 in it because it's 25% deposit. That's 25% of the 200. And my buy-to-let with a nice family in there, on average in the UK, yields £300 after you paid the mortgage. I'm assuming no voids and, no, roughly where interest is. £300. Now, I was sort of thinking, right, how do I get my second? Because to get your second buy-to-let over these next 5 years, you've got to find another 50,000. Well, maybe I'm thinking, right, I was thinking, can we buy a little bit below market value? We can do it up a little bit. We can get some of our money out and maybe we save our £300 a month. Right. Could we somehow get another 50,000 together? I mean, I'm pushing the boundaries. If I could buy my second property. That's where I then get £600 a month. I don't really know how I'm getting my third. Okay. Maybe I'm going to refinance my own home. I'm going to refinance my own home, draw 50,000 out. So I've actually put 100 in, to be fair. I'm cheating. But that's three. I mean, can you see the logic? Now, with HMOs, let's say I'm going to buy an HMO. I'm going to borrow some private money. I'm going to put 50,000 into it. I'm going to try and buy it below market value. I'm going to rent it out. I'm going to try and refinance it on a commercial valuation. And I'm going to get most of my money back out. Let's say I'm going to get half my money out. So I leave 25 in. Okay. So I've got 25 now to go again on my second. Oh, okay. Save up some of the money. If I'm going to get £1,000 a month in out of that, that's 12. I don't know. I've got a bit of extra cash. I could get my second. If I run my HM for 2 years and put the money straight into it, that's another 25. I could have 2 HMOs in 5 years. I might be able to get 3. Maybe, I don't know. You really go for it. But with just 50,000, I'm only talking about £50,000. And I might do 1 service department. Maybe I could get 2. Maybe I could get 2 on the same principle. Do you follow my logic? Is that making sense? I mean, work it out yourself. Write these numbers down. You owe it to yourself in 2025 to write these down. See how that stacks up. See how that makes sense. Now, what else could I do with £50,000? Well, I could buy a property worth £400,000. Okay. I could buy a commercial property for conversion worth £400,000. I've got to put in a 30% deposit, which is 120. 30% of 400 is 120. But here's the thing. Because this is a commercial property, because I'm going to convert it to residential, I'm going to massively uplift the value. So I'm not only going to get all my money back out, I'm going to get a big chunk of profit. And I can tell you, very simple terms, if I had £12,000, which is 10% of that deposit, I can borrow the rest off some private investors because I know I'm going to get their money back out. I could buy a £400,000 property. And if I roughly spent 300 and something on it and some interest, I reckon there's 200,000 profit. And I often talk about, can you leverage 12,000 to 200,000 pounds? 12,000 pounds. I've got 50. So quite simply, minimum. Okay. Now bear in mind, it's going to take you 2 years to do your first one. You're going to still get your money back out and you've got a lump of profit. Okay. I reckon easily we can do 4 in 5 years because we're going to double up on the 5th year. We can do 4. So, because I've got 50,000, I've only got to put 12 in each one. 4 12s, 48,000. And in fact, I'm being conservative on this because once I finish my first, I got my original 12 back. I could do a 5th or a 6th. But simply, if I did 4 with my 50,000 pot, I could make 800,000 profit, 200,000 out of each one, minimum. That's where you've got that choice. Now, if you look at the numbers, what I've done, I've been optimistic on buying my buy-to-lets and HMOs and service departments, and I've been conservative on my expenditure and minimizing reinvesting my profit into my developments. And what could you do? What could you do if you had £800,000? Well, you'd have a good old spend up, wouldn't you? You'd definitely have a good Christmas, wouldn't you? You'd definitely have a good Christmas. You'd have a great year, but you'd have a good several years. But what else could I do with my £800,000? Well, what if I kept half of it as cash, stick that in my pocket, okay? Have a little spend, have a little treat on a few bits. What can I do with my other 400? Well, based on 50,000 for a buy-to-let, I could buy 8 buy-to-lets, couldn't I? £400,000, 50,000. That's 8 50,000 deposits, 8 buy-to-lets. So my choice is I could have £400,000. Here's another option for you. Never thought of this one. I could have £400,000 cash in my pocket and 8 buy-to-lets. And I'm not really worried about the short-term passive income. It's the simplest of business models in property without all the noise, apart from development, which is even simpler. But actually, it's just generating me a long-term investment. And those are the choices. That's what you can do. Now, 2 years. Let me just explain. Because a lot of people go, that's great, but I want to do it quicker. You can't. You're sat here in January 2025. Let's say you made that decision to do it today. Okay, let me outline this. Grab a pen and paper. Just pause this video. Grab a pen and paper to write this down. It's going to take you 2 months to understand what you're doing. The who, not how. Read that book, by the way, Who, Not How. It's going to take you 2 months to get educated, whether I educate you, support, guide, mentor you, or someone else. Let's say you're lucky enough to find a project within your first month. So 3 months in, you find your first project. 2 months to educate it, 1 month to find your first project. Then you instruct your solicitors. How long are they going to take? 3 months? Okay, so another 3, we're 6 months. You're going to get your permitted development rights. I can talk to you more about that at a later date. That's going to take you 2 months. So 6, that's 8 months. We're going to have to get a contractor on board. It's going to probably take us at least a month to go out to tender and get it back. Okay, so what were we? 8, that's 9 months. It's probably going to take me 9 or 10 months on site. Okay, so I've got, what have I got? I've got 8 months. I've got, let's say 8 months plus 10 months on site. I've got 18 months. Then I've got 3 or 4 months to sell it. 21, 22 months. Do you see what I'm saying? That's why if you start now, you could be celebrating, and you can invite me around as well, in Christmas, December next year. December 2026. You could be celebrating with the first of your £200,000 minimum, I'm going to suggest, in your pocket. What are you going to do? What's your choice? Vote now. Become a buy-to-let landlord. Stay a buy-to-let landlord. Diversify into HMOs. Stay in HMOs. Get into HMOs. Start your service department journey. Stay in service departments. Diversify in service departments. Or become a developer where the government is supporting you and you're earning lumps of cash. The legislation's there. The tax is supporting you. There's no wonder, in my opinion, 2025, I agree with others, it's going to be the year of the property developer. So don't miss out. What do you think? Make sense? Give us some comments below. Tell us what you think about this. And if you are interested in doing a bit of training, okay, propertyceo.co.uk/SFR. I'll say that again and we'll put it in the notes below. propertyceo.co.uk/SFR stands for 6-figure roadmap. It's about earning 6-figure sums. Click onto that. A bit of free training that's up there that'll get you started and you can see whether this could be for you. Hopefully you liked what we've done here. Hopefully it's a good start for your new year. Please like and subscribe as always, and we'll see you in the next edition of the Open Door Show. Cheers now. Bye-bye.